Hello, everybody. Welcome back to another session with F45 Trading. Today, I just wanted to talk about just a real simple concept, and hopefully it'll help some of the newer traders out there. I wanted to take some time off and on throughout the year and just do a couple of these informative videos for you to hopefully help some of you with again, new traders and hopefully get a little more profitable with some of your trades. Now, today I want to talk mainly about trade management, profitability, and not shooting for, obscene realistic amounts of pips. You guys, you don't have to go out and score, 500 pips a week to be profitable in this business. All you need to do is really limit the amount of risk and exposure that you have with some of your trades and dial back the amount of trade frequency that you have. And a lot of you will be wildly successful, way more so than you ever thought possible, by just dialing back the frequency to staying very, very consistent, very, very steady, and not worrying about trying to make 500 pips a week. Okay, so what I'm going to do is I'm just going to flip over to a screen and just show you a couple of models that I've been working on here that I think, again, very, very simple to understand, and walk you through a very hypothetical textbook scenario, really, that you can achieve on a weekly basis and just repeat, rinse, wash, rinse, repeat, week in, week out for a year, and show you the results of that and what you could potentially achieve if you have discipline and proper trade management in place. Okay, so let me flip over to just a scratch pad that I've got here. And I want to just start off by saying your pip goals for the week. Again, you don't need to have 500 pips a week. You could be extremely successful in this business by just shooting for 60 pips per week. And I'm going to show you what that looks like here, okay? And the other thing as well, too, you got to understand is this scenario that I'm explaining to you, we are wrong 2 out of 3 times on our trades per week, okay? So just so you're aware, I'm not suggesting that in order to be profitable in trading Forex, that you have to be right 100% of the time, because you really don't. And I'm going to show you an example here where you're actually wrong 2 out of 3 times during the week, okay? So I'm going to start off with a hypothetical account and say we've got $10,000 equity. Now, obviously, you scale this to whatever you have available. Maybe it's $1,000, maybe it's $100,000. I don't know. I'm going to start off with $10,000 just for this, for illustration purposes. Now, you shouldn't be risking any more than 2% of your total account per trade, okay? And this even is a little bit high. You can actually achieve incredible results with even just 1%, but for this illustration, I'm going to use 2. I'm going to frame a 3-to-1 setup. So what I mean by that is for every 1 pip risk, I am going to try to achieve 3 pips risk, a reward, excuse me. So in this instance, if I risk 2% of my account, I'm trading with let me switch colors here, a $10,000. So let me show you what this looks like. So if I'm trading with a $10,000 account, I have 2% risk. That is $200. So that's my total risk. My total reward, if I'm looking for, again, a 3-to-1 risk to reward ratio, that would mean for every $200 of risk, I would be looking for a $600 reward. Okay, so that's how that's framed out. Now, with a $10,000 account, you shouldn't be trading any more than 1 standard lot. Okay, 1 standard lot is equal to exactly $10 per pip. So if price goes up 1 pip, you make $10. If price goes down 1 pip, you lose $10. Okay, now, and this also obviously does not include any dealer spread or anything like that. So you'll have to factor that in, in your own time, of course. So no dealer spread. So again, if I have a $1,000 account size, then obviously I would be trading one mini lot. If I have $100, I would be trading one micro lot. You do the math and you figure that out, but that's basically how that gets all framed out. Okay, that's what you should be trading with, and these are the numbers that I'm using in my calculations as well too. Okay, so we have our equity in our account is $10,000. We're risking 2%. We're looking for a 3-to-1 trade setup, and we're using one standard lot of risk. Okay. Now, we've got in here our first trade of the week. And again, we're only looking for 3 trades per week. Only. Okay. We are not going to overextend that, trade 3 times a day, 30 times a day, or anything like that. Like some of the new traders that go in and they could think they got to be in the markets constantly, in and out 100 times a day. That's not true. 3 trades per week, that is it. Okay. Trade number 1. And let's say our trading days are Monday, Wednesday, and Friday. Okay. So Monday comes around. Trade number 1, we spot it on the charts. We say there's a good setup. There's a good 3-to-1 setup. So what do? I go in, I set my entry in. I put my stop at 20 pips. Maybe we're going long. So I set my stop 20 pips below the market. I set my take profit number 1 at 20 pips. Now this is the critical thing. This is the one that we've got to focus on the most, because this is the nice little money maker for us, even when we're wrong. And then I set my take profit number 2 at 60 pips right here. Okay. So these would be the results. If I got stopped out, I'd be minus $200. If my take profit number 1 got hit, I would be plus $100. Okay. If my take profit number 2 got hit, I would be plus $300. Now, there's a very important factor that we need to know here. If price decides to go up into our favor by 20 pips and it hits our take profit number 1, okay, what you want to do is you want to close half of your position and let the other half of the position ride for the next 60 pips. Okay, that's very critical. What you also want to do is you want to move your stop loss to break even. Okay, I'm going to talk about this a little bit more in the second example. Okay, but I just want you to keep that in mind. So now for this trade here, like I say, 3-to-1 setup, we set it all up. We'll stop 20 pips, take profit 1 at 20 pips, and take profit number 2 at 60 pips. What ends up happening? The market we're wrong that day. So Monday we start trading, we set it up, we're wrong. Price goes right down to our take profit, and we take a loss of $200. Okay, so we're down to start out the week. Boo-hoo, it is what it is. We get up on Wednesday, and we start the process over again. Trade number 2, we set up, same thing. Looking for a 3-to-1 setup. We find one in the markets, so we set our stop at 20 pips, our take profit at 20 pips, and our take profit number 2 at 60 pips. What ends up happening is the market price goes up in our favor, and it hits our take profit at 20 pips. So what do I do from there? First, I close 1/2 of my trade, and I leave the other 1/2 on. I then move my stop to break even. Very, very important. I pay myself $100. I put that in my pocket. Nobody can get that. That's mine. By moving my stop to break even, I am now trading completely risk-free. So the market could go up, it could go down, it could do whatever it wants to do. It doesn't matter. I've removed all of my risk off the table, and I've paid myself. I'm profitable that day. Okay? What ends up happening to the trade is, after I take my initial first profit of $100 and close half my trade, price comes all the way back down and stops me out at break even, and I make $0 on the portion of that trade. Okay? So, sum it up so far. Day number 1, we are down $200. Day number 2, we are up $200. So net result is we are still down $100 on the week, and we have been wrong twice. Okay, so we're doing 3 trades this week, and so far 2 of those trades we have been incorrect because we got stopped out on the bulk of the trade on day number 2, and we only made $100. But again, proper trade management, you can still make money. Okay, Now, going into day number 3, exact same setup. 3 to 1, we put our stop at 20 pips. We put our take profit number 1 at 20 pips and our take profit number 2 at 60 pips. Okay? What ends up happening is take profit number 1 gets hits. Woohoo! We make $100. Price goes up to 20 pips. Hits our take profit number 1. What do? We close half the trade. Then we move our stop to break even. We're now trading risk free. Okay, so if we're trading with one standard lot, we are now trading, after we close that, we are now trading at half a standard lot, or $5 per pip. Okay, what happens from there? The trade goes in our favor. It goes all the way up to our 60 pip profit objective. We have now made on the remaining amount right here, $5 per pip times 60 pips equals $300. So for day number 3 and the last day of trading, we've made now $400 on the week. So let's review real quick. Total weekly pip count. Day 1, we were stopped out, minus $200. Day number 2, we made $100. Day number 3, we made $400. 500 minus 200 equals $300 on the week. Okay, now multiply that $300. If all you did was do that week in, week out for 4 weeks, you would make a $1,200 monthly return. And I'm only trading 12 times per month. That is it, guys. This is not crazy. I mean, I know some traders are out there that are brand new that do 12 times a day. It's insane. We're only doing 12 times a month, okay? And we are profitable $1,200 to the upside. And guess what? Remember, we've been wrong twice, right? Trade 1, we were wrong. Trade number 2, we were wrong. Trade number 3, we were right. So we have literally a 33% win ratio. That's terrible. But with proper trade management, you can still be profitable, okay? Now, if you multiply a $1,200 monthly return into your initial account size of $10,000, that gives you a 12% monthly ROI, or return on your investment. If you did that month after month for 1 year, guess what you guys get? A total of $38,959 on the year. That is huge. That is almost a 400% account increase in 1 year. And again, we weren't slaving over the charts. We weren't trading like a madman. We weren't in and out 100 times a day. That is just simple, 3 simple setups for 3 days of the week with proper trade management, and we were wrong most of the time, and it still netted us a very, very profitable, handsome result. Okay. So anyway, I just thought that might help you out a little bit. Sorry for my writing. I know it's a little bit messy, but I just kind of wanted to give you an idea of what is possible. And one of the main reasons why I wanted to show you this is because this actually happened to me earlier in the week. With proper trade management, I should have capitalized on a great trade. And it was in my demo account. It wasn't a big deal. I was just more so practicing because we're so early in the trading year. I'm not actually trading for another couple of weeks and risking any live funds. So I was just doing demo trading. But I let I put a limit order in. I set my profit for 60 pips, and I let the trade go. And I actually went to bed. It executed throughout the evening while I was sleeping. And I woke up in the morning, and price had went all the way down to my take profit, minus about a half a pip. So unfortunately, with the dealer spread, the trade did not get executed. The take profit didn't get executed, and it turned out that price reversed and went all the way back up to my entry. So had I have instituted proper trade management and actually been watching that trade, I would have paid myself at least, once during that trade, if not twice. Once it gets down to my profit and starts to reverse, I probably would have, my ultimate goal probably would have closed the trade. But nonetheless, I could have still been profitable, and I ended up taking a small loss in my demo account. It is what it is. It's not a big deal, but it just kind of gave me an idea to sort of show you guys what could be possible if you properly manage your trades, and you're not shooting for pie in the sky. You're only shooting for 60 pips per week. That is very, very attainable. So I hope this has helped, and I tried to keep it as short as possible. If you have any questions about this, by all means, please send me a DM on Twitter at F45 Trading. I'm on Instagram at Future45 Trade Signals. And obviously my website is right down here below at f45trading.com. Please feel free to check that out. Send me a message or a note or an email or whatever you like, and let me know if this was able to help. Thanks very much for everybody. And please do me a favor and just maybe like this video if you could, and share it out to your friends. Help it get a little exposure. I would appreciate that. Thanks for watching, guys.